Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial secrets of big companies and uncover the real story behind the numbers. Get ready because today we've got a story about a banking merger that has been cooking for a while and just got some major green lights. Today we're dissecting a recent filing from Synovus Financial Corp, an important report detailing significant developments in their business. This isn't just some boring legal document, instead, it is a snapshot of where Synovus is headed and the big moves they are making. We will break down what it all means for the company, its shareholders, and yes, potentially even you. We also have a Discord community linked in the description below for more in-depth discussions about these reports. So what is the big news? Well, Synovus and a company called Pinnacle Financial Partners Incorporated announced they've been getting all the necessary approvals for a pretty massive deal. We are talking about a merger that has been in the works since July of last year. Think of it as two big banks deciding to become one super bank. The core of this deal is what they call an agreement and plan of merger. It sounds complicated, but basically it just means they have a formal plan to combine their businesses. The idea is that Synovus and Pinnacle will merge into a new company, which will then continue as Pinnacle Financial Partners Incorporated. After that, their respective banks, Synovus Bank and Pinnacle Bank, will also merge with Pinnacle Bank surviving. They are aiming for this whole transaction to be complete by the 1st of January of next year. Now, what is really important about this report is that they received approvals from some very important regulators. We're talking about the Board of Governors of the Federal Reserve System, which is a big deal for any bank merger. They also got the go-ahead from the Tennessee Department of Financial Institutions and the Georgia Department of Banking and Finance. Getting these approvals means the major regulatory hurdles are cleared and the transaction is well on its way to closing. This is a critical step because without these governmental stamps of approval, the deal could not move forward. To give investors more context about this merger, Synovus and Pinnacle released a joint investor presentation on the 25th of November. This presentation acts as a guide, offering supplemental information about what this combination will look like. It is likely filled with details about the combined company's strategy, financial projections, and how they plan to integrate their operations. Think of it as them showing off their vision for the future after they become one. Along with that presentation, there was also a joint press release issued on the 25th of November. This press release officially announced the news about receiving the necessary approvals from the Federal Reserve and the state banking departments. Press releases are often crafted to put the best possible spin on news. So while they announce key events, the investor presentation would likely contain more detailed insights. Let's talk about the stock. Synovus has its common stock traded on the New York Stock Exchange under the ticker symbol SNV. They also have preferred stocks like Series D and Series E also listed on the NYSE. As this merger progresses and eventually closes, what happens to these different classes of stock will be a key point. Will they be converted into shares of the new combined entity, or will there be other arrangements? This is something investors will be watching very closely. Now, every company that trades on a public exchange has to file these reports with the Securities and Exchange Commission, or SEC for short. This particular filing is a Form 8K, which is used to announce major corporate events that shareholders should know about promptly. So this report is essentially a signal flare letting everyone know about the significant progress on this merger. The report also includes what is called forward-looking statements. This is standard practice, and it is basically a disclaimer. Companies use these statements to talk about their future expectations and plans, but they add a warning that things might not turn out exactly as planned. They are essentially saying, this is what we hope to achieve, but there are risks and uncertainties that could change the outcome. It is their legal sire, to use an informal expression. And speaking of risks, the filing is quite clear about them. They warn about things like the possibility that the cost savings from the merger might not happen as quickly as expected. There is also the risk of disruptions to both Synovus and Pinnacle's businesses because of this pending deal. Integrating two companies is never simple, and they acknowledge that it could be more difficult or costly than anticipated. Other risks mentioned include potential regulatory hurdles, the failure to satisfy closing conditions for the merger, and general economic conditions. It's a long list, and it highlights that while the approvals are a huge step, the journey to a successfully merged company still has potential bumps. The report is signed by Alan E. Kamensky, who holds the title of Executive Vice President and General Counsel for Synovus Financial Corp. This signature signifies that the company stands by the information presented in this filing. Now, for my take on this deal, the fact that Synovus and Pinnacle have secured these crucial regulatory approvals is a massive win. It signals that the authorities believe this merger will not harm competition and is in the best interest of the financial system. This significantly de-risks the transaction for investors. The biggest challenge ahead will be the actual integration of the two companies. Merging cultures, systems, and operations is notoriously difficult, and often where these deals can stumble. If they can execute this integration smoothly, the combined entity could indeed be a stronger, more efficient player in the banking industry, potentially leading to better customer service and more robust financial performance. However, the risks outlined, especially around integration costs and potential disruptions, are very real and should not be ignored by investors. Keep a close eye on how well they manage the post-merger environment. Alright, that is our breakdown of Synovus Financial Corp's recent filing. What is your take on this banking merger, and what do you think the biggest challenge will be for the combined company? Let me know your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord link in the description for further discussion. Thanks for watching. See you next time.